Hey, this is Matt from InvestiQuant. Today is Tuesday, February 2nd, 2021. This morning we saw another gap and go like scenario that has formed. We opened up above the prior session's high, and in today's instance, we took off straight from the open. The opening print was pretty much the low of the day. We've opened down near the lows. We're trading up near the highs, and we've got pretty directional activity that has taken place. It's quieted down a little bit as we are consolidating here early into the afternoon session. But what I figured we would do is take a look at this pattern, see how it has developed as we approach the close this afternoon by testing it in Discover in all four instruments. So let me get this set up as an intraday time-based entry that gets long at 3 p.m. Eastern Time. It exits at the close. Now, to describe the price action, I'm going to say that we opened above the prior day high. So if I go into opening filters and hit equals next to open above prior day high, that'll add it to the test. Next, I can go into the post-open filters and describe the price action that we have seen thus far into the session. And I'm going to do that by saying the open was in the bottom portion of the range and the 3 p.m. price is in the top portion of the range. And I'm going to use 25% as that demarcation for which portion of the range. So I'm going to hit equals and open in the bottom 25% of the intraday range, close in the top 25% of the intraday range, and that's referencing the 3 p.m. price, that closing level there. So at 3 p.m. it is trading in the top 25% of the range. At the open, it was in the bottom 25% of the intraday range. Next, I'm going to put it in a similar market environment where we closed yesterday below a 10-day moving average but above a 200-day simple moving average, and then click View Results. And here we go. These are the results of going long at 3 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. When you get this kind of gap and go like scenario, you're opening above the prior day high. The open is in the bottom 25% of the intraday range as of 3 p.m. And at 3 p.m. exactly, you are trading in the top 25% of the intraday range. So you've got a green daily candlestick that is forming, and then this is in the context of a market that had closed below a 10-day moving average but above the 200-day moving average on the prior session. So historically, we've got 47 samples in the S&P dating back to 2003, similar sizes for all of them. We've got 43 in the NASDAQ, 46 in the Dow, and then Russell a little bit lighter at 34. And the win rates on these really not indicative of much. We've got the S&P very neutral here, 51%, the NASDAQ 49%. The Dow is the weakest of the group, coming in at 41%, and then the Russell in line with the other three at about 53%. So none of these have really had a strong edge or historical tendency to move in one way or the other in a consistent fashion for that last hour, just based upon this win rate. They're all neutral, with the exception of Dow being a little bit weaker. If we look at the average win, average loss, the average win is bigger for the S&P. That is also true for the NASDAQ, and it's very similar in size for the Dow and the Russell. So the S&P and the NASDAQ, very neutral win rates. The bigger wins have been on the upside, whereas the Dow and the Russell have had very similar wins and losses on average. So historically, this pattern is really not showing much of an edge as we approach the close. So not really seeing anything here, quantitatively speaking, to be excited about. But hopefully you found that helpful. Good luck, and we will see you next time.